starting place. We want to keep it really simple, not too overwhelming. But I'll let Nate cover just the basics of
Yeah.
buying call
So the
options.
whole idea behind call options is you're able to access the securities or equities by virtue of you're essentially placing an order to buy the stock at a certain price at a certain time, right? So there's a buy sell like any normal stock. Somebody's trying to sell a security, an option, and you're trying to buy one with the right to purchase it in the near future. So as a seller's putting this on the market, they're getting what they call a premium. TD Ameritrade is a good one. Dill uses that. Think or swim, right? And so what you're trying to do is take the premium that is being put on the market. So the seller's putting a stock or an option on the market. They're collecting a premium because you're paying, if you're buying the call option, you're paying the right to own that stock at some point in time. And so as you can see on the screen, strike price, that's where you break even, is if you're able to purchase it either below or at that price. That's essentially where you're going to break even if it ekes up to that point. So you see the break even point, strike plus premium equals or break minus, break even. Sorry, the screen's a little messed up. Strike plus premium. So essentially, I'll pop up a screen here in a second. Sorry, my screen is
Please,
goofing a
if
little
anybody
bit.
has questions, please ask us questions.
But I'm going to keep this as simple as possible. The idea is you have the right to buy a stock at a certain price. But the very, very important thing to note here is you're buying in denominations of 100. So the bare minimum, so one share is actually 100 shares of the stock itself. So let me.
So, like as an example, so say, let's use Ford because we've been talking about Ford. Ford's at it's like what, $16 right now a share. So, if I'm buying one call option for Ford, I'm buying 100 shares of Ford's. I'm buying the right to 100 shares of Ford stock. So that's something that you really have to keep. You really have to think about because you have to understand your risk. So if you're buying 100 shares times $16, that's a pretty big buy if you're thinking like your potential upside gains or downside losses. It's not just buying one share of Ford, you're buying 100 shares of Ford. That's like an easy way to think about it.
All right. So I'm going to pop this open really quick and go through it. I think y'all can see the screen, right? I hope so.
It hasn't changed yet. I'll let you know though.
Yeah, it should pop up here in a second. 1600. Yep. What are you talking about? 1600. So here's an easy one. Ambev. This is the Solo Beverages.
Yeah, $1,600.
Mm-hmm. Yeah.
100
Sorry.
shares at $16. Yeah.
Correct.
Buy.
So that's what you're buying if you decide to execute the option, right? So here's the idea. Ambev. This is an easy one. Or if anybody has a different stock, let me know. But Ambev, this is just kind of an easy one because the premium is going to be slightly or dramatically less. The higher the price, the more the premium typically. So specifically, if you see something ramping up, you see an uptrend going or a rally occurring, what I look for are value stocks. Typically anything under $20 is what I got my parameters that I stock, if you will. And so as you see a downward trend, this is when I'm looking to buy either a stock on the dip or I'm buying the option, depending what it is, because you're buying an opportunity to buy it in the future, right, at any point in time. So this is where I would not buy it as it's going up because it's going to multiply in terms of how much it's going to cost you to purchase that option. But what I'm looking for, once again, like any stock, right, you're looking for a dip, you're looking for an opportunity. So Ambev, any good websites to look at, stock forecasting. There's stock screeners and option screeners in any platform, really. I use eTrades because that's the platform I use. But I'm using Robinhood for the sake of simplicity here, since everybody kind of uses this one. Don't pay attention to my buying power. This is my account that I'm currently looking at. I have money in some other stuff. So, but what you want to do is go trade options, right? And so this is the very, very important part, right? So here's the share price. What you also need to factor in is not all of these are going to be equal in terms of the prices. So you see these are in increments of 50 cents. Some go by 10 cents, some go by 25 cents, some go by 50 cents or more, $1, sometimes $5, depending the frequency and the volume of shares available at any point in time. So pretty simple to understand. But recall all the stuff that we've talked about in the past, right? We want to pay attention to the trends. We want to pay attention to the news, the volume, how many shares are floating, how many are outstanding rather, and floating. Listen to everything we've said, because this is where it all comes to a culmination of opportunity. So share price is currently $369. What we're looking at is, this is a strike price. So this is what you would pay if you were to execute the option. So what you want to be looking at is, what am I going to be paying for if I decide to execute the option? So here's the risk and premium that you'd be paying and what the other person would be receiving if you were to buy the stock. So buy, call. I'm not going to talk about selling calls. I'm not going to be talking about buying puts. That's even further down the road that we'll talk about. But for the simplicity factor of this, once again, you're buying a call option, giving you the right to purchase that stock in denominations of 100, right? These are 100 at the price and time that you decide to. So right here, you see all of these different options in dates, expiration dates. So July 16th, you'll see October, January. What I look for, first and foremost, I try to go out as far as I can and kind of work backwards. So what I want to do is give me as much time as I can to accumulate wealth over time. If I think Ambev is going to spike in the summer because sales at 7-Eleven are going to peak, Coca, all the Pepsi, or not even Pepsi, but soft drinks that are under Ambev are going to peak because people are traveling, the movie theaters are opening, etc. Those contracts are going to start to rise and prices are going to start to increase in the share price, etc. So what I'm looking for is, okay, what's going to happen between now and January 21st, or maybe even 2023? The further out you go, the more the premium is going to cost you. So bear that in mind, because the risk that the person is taking to sell you the opportunity to buy it from them is going to increase, right? Because you could buy it. Yeah, a vid is definitely warranted here. You can YouTube all this stuff, but since we have your attention right now, feel free to ask as we're moving forward through this. So 2023, I kind of work backwards. I'm going, okay, what's the cost to me if I'm trying to buy this at $350, right? What's the opportunity here for me to be able to purchase this? And so what I'm looking at, if I want to buy it at $4, there's a premium of $1.43 is what we're looking at, right? And here, Robinhood does a very nice job of giving you an opportunity to look at if it were to go up, if it were to go down. The beautiful thing with call options is once you buy something, the most you're going to lose is what you invest in it. So remember, we said these are in chunks of 100 shares. So it's $1.43 per share, right? Multiplied by 100. And down here, it tells you your max loss is 145 because that's what you're paying out. So your worst case scenario, you lose $145, but you're also investing way less than what it would cost you to buy 100 shares at $3.69, right? So that delta is the risk reward that you're assessing at that point in time. So do you want to buy those shares and ride it out and hope that it rises and not have money to buy other shares? Or do you want to just buy the shares and hope that everything works out? And so what we're looking at is, where's that break-even point, right? So we're hoping $1.43 per share plus $3.69 equals the break-even of $5.35, or $5.45. So the price of the stock needs to hit $5.45 or more for you to make a profit on this. So think about this, January 2023. Do you think the price of this is going to go above $5.45? That's ultimately the question at the end of the day. And are you willing to pay $145 for that to come to fruition, potentially? That's the basics of call options right here, the fundamentals of it. So as you're looking through, right, you want to be paying attention to, I'm not going to get into the Greeks. This is a whole different ball game here. Delta, theta, vega being the volatility of the stock, the theta being the indication of the price decaying over time, if you will. So the closer, I'll talk about that a different day. I'm not going to get into that. Open interest, that's getting deep. Open interest, how many stocks are open to, or how many have been purchased at this current time. Implied volatility, won't get into that. But the main thing you want to be paying attention to is are you willing to risk or pay this amount for potential reward in 2023, right? So I do a lot of long call options, meaning I'm buying way out with the assumption that the economy is either going to get better or that specific industry is going to take off. This one, for example, summer's coming up, October 15th, instead of paying, where are we at? Let me reset this. Close that. Okay. So the share price, once again, 369. We're looking October of this year, assuming summer's going to kick off and they're going to sell more soda, right? $4, 350. If you're looking at $4, now it's 20 cents, right? And multiply by 100, $20 instead of 145 or 100, you know, over $100, because the time frame between now and October 15th is way shorter. The
And
premium,
so as you can see there too, the break-even price is lower because it's a shorter time frame.
right? So that's the pros and cons of all this, projecting a price for the stock with the proper. Exactly, King. Exactly. The change, that's the change for the current day. So it lost 8 cents for the day. As you can see, the stock dropped 2.89%. The change in price is associated with that. So as you're watching stocks go up and down, right, like any other stock, right, you have something in place you have in mind. Okay, I'm willing to buy the stock at 350. I'm not going to pay 369. Same thing applies here, right? Because as the stock goes up and down, it's correlated 100% with the stock. With the call option. Right, exactly.
Yep.
So it's tailored to this. It's correlated 100% to what's happening with the day, right? And so you'll see, like with what's a meme stock? Give me a meme stock. We'll go GME, I guess. So you're gonna see. Look at the price difference. Just because there's a lot of hype around it, you're gonna see a lot of open interest. You're gonna see implied volatility, meaning it's going like this. 0% as it stays flat, the price remains the same. 200% is like all over the place. AMC will
Higher
pop
risk,
AMC.
higher reward.
Exactly. So it could be up, 100% one day and down 100% the other day, and so you're risking it. So AMC, it's kind of chilled down.
Say you buy a call option for sometime in 2022, do you have to hold that call option that whole time, or can you sell it at some
You could sell
point?
it at any point in time. Very good question, by the way. And I've done that multiple times. In fact, what was the meme stock? Clove.
Yeah.
So this one, I lucked the out on this one. So I bought a long call option on this because Dylan and I have been paying attention to Clove for 3-4 months, maybe.
I talked about it back when it was at like $6-7 a share.
Yeah. So I bought a call option like way out from when we first discussed it. It was probably more than 6 months ago. But say, I was like, I bought it, I'll buy it in November. So I bought it dirt cheap and a call option. I bought a couple shares of it. So 200 shares essentially of a call option. And my premium, I think, was like $20. And I sold it for way more than that. I'll say that. Part of it because of the meme, but I was able to execute it before my expiration date, which was, I think, 2022, January. And so what I decided to do was, since it peaked, I was like, I'm going to sell this and make a profit. And then if it dips or, something weird happens to it, I'll pick it up later.
So Nate, when you're looking at finding a specific...
Not GME. I would not either, King.
Yeah, GME to be sketchy.
I'm staying away from that.
When you're looking at a time date to purchase, what are the things you're looking at? Is it the volatility risk? Is it how close the break even is? Kind of
everything. Yeah. Very, very good question. So what I'm looking at, for example, is, the change is a big component of it. I'm looking to see where the trend's at, like we do with anything, right? You're looking at the graph. Where's it going? I'm looking at the news. What's the... the airlines, for example, they all banded together this last week and were like, we want flights to start going international. So I'm going, okay, what stocks do I think would go up where I don't have to invest all my money? So let's see let's go American Airlines. So you have American Airlines. They came out swinging. I think it was American Airlines with a couple other folks.
Let's preface this. So, as Nate just said, American Airlines, travel's picking up. So Nate mind, okay, their demand goes up. That means they're going to start making more money. So in theory, their price should go up, and
exactly.
Maybe Nate's looking at maybe towards the end of the year or something, or beginning of next year, as a time for the stock to start moving
exactly.
higher.
I know people are going to travel in summer. In fact, there's record levels of people traveling this week. And so for me, I'm going, okay, can I beat people to the news? Can I beat the news, right? Is kind of my mindset is I know what's going to happen theoretically before investors know, right? But you also have to, like we mentioned last weekend, the market is working against you. Other people want to make money. So how do you get one step ahead of them? And by part of call options, this is what I'm looking at. So figure summertime, probably August, November is where I'm going to be looking at, just to kind of figure out. The other thing is I don't like paying more than about $150 a call option. I'm just going to say that right now. All my call options are typically less than $150. Anything higher than that, I don't feel like paying the premium for that. So basically market illiterate here. What happens at your expiry date? So either it'll automatically expire if it's out of the money. This is why I'm not getting too technical. If it's out of the money and you're not in the money, meaning you're not making money, it'll automatically expire and it will not purchase the stock. It'll die off. But if it's in the money, it'll execute the purchase of the stock for you automatically, typically, depending on the platform you're using. More often than not, that's how it functions. However,
what execute means is you'll own those shares.
Exactly. So you better have 293, well, apart from the 293, you better have $2,360 in your account to make that purchase of all those stocks. So, but you could beat it to the punch. Oftentimes, like I do, is I hold these either to purchase them at the price that I came in. So if it's at $23, that's my strike price. I paid $338 to have the right to purchase the stock at $23. So at any point in time between now and November 19th, as it says on the screen, if it goes to $50, I have the right to buy it at $23, even though it's at $50. So that's the contractual agreement you have with this person or institution, more likely than not, that's putting these up for sale. So they're gaining $338 from me, but I have the right to buy it at $23 between now and November 19th. That's how any call option goes. And that's exactly what I'm looking at. So when I'm looking at, I'll go back to ABEV.
So like as Nate looked at that, so we use ABEV as another example. It's like, okay, we think due to the economy reopening, people traveling more, people are taking, I think, more road trips than ever this summer.
Yep.
People are going to stop in gas stations. They're going to buy sodas. People are going to movie theaters.
Let's go Avis. That's car rental. I bought them early on. I bought them when it dipped. Like I bought these at like $15.
Same example. So like in your mind, it's like you're trying to find stocks that you have a really deep conviction in.
Jesus.
That are going to move up sometime over the next 6 months or something.
Exactly. So I'm not paying $1,400 for this. Like if that's a scenario, sometimes I look at what's the price to call price. I'm looking at 94. Sometimes it's cheaper, honestly, to buy the stock itself rather than the call option, depending on the price.
Hey, everybody in the chat real quick, is Nate's mic breaking in and out? For some reason, I'm hearing it break in and out. Is anybody
Sorry, my mic might be a little off. And I need to step back. I'm way too close to my mic.
Real quick.
I'm way too close to my mic. There we go.
Your gain might have been messing up, making your voice go in and out.
Yeah.
Just a heads up.
Perfect, thank you. So yeah, I'm looking at stock price, I'm looking at call price, and I'm taking that delta to say, okay, thanks, King. I'm looking at this price and I'm looking at the call price, and I'm going, this $14.25, how many shares can I buy at $94 versus $14.25? It might just be your end. It's good.
I think so.
Well, yeah, we're on Discord too, so it might sound different. But that's kind of how I work it, right? And like this car company, you'll see it gets way more expensive the closer we get. Cheaper the closer we get, right? So June 18th, we're June 12th. So in 6 days, do I think it's going to be worth more than $95? Fuck if I know. Like, 6 days doesn't give me enough time. And what I want is I want the breathing room to make a determination to say between now and maybe 2022, $95, will it be more than $95 by next year? Maybe, but am I willing to pay a premium of $1,600? Not really. I got to make the stock has to be $111.40 for me to make money on it. So think about that. So you add the premium you pay, $16.35 per share, plus $94.25. That's how much you have to make on the share before you make a profit. So basic math, but do that time and time again with every different option that you have here. Maybe you're like, you know what? I'm willing to. I think it'll go to $100. I'll pay $14.50 a share, $1,400 for 100 shares at $100. I think that's worth it. So what I'm looking at also, I'm not looking at buying in the money. Like in the money meaning I'm making intrinsic value. I'm making money on this already by virtue of owning the share. So if I'm buying at $92.50, I'm buying in the money because the price of the share is $94.25, but I have the opportunity to buy it at $92.50. I don't see the value of that, right? What I want to do is pay less premium with an upward trend of it breaking over 100 or whatever the option is. So if you guys have a stock under $20, let me know, because that's, like I said, that's what I look for. Those are my victims in stocks that I like to hunt down. ABEV being one of them. What I'm looking at, for example, I'm going to give you how I analyze this. I'm going ABEV, people are going to be flying, contracts are going to be going around, movie theaters, travel, gas station, like anywhere that sells soda. I'm going to go, okay, probably by 2022, there's going to be a lot of, this is going to start increasing. How much of a premium am I willing to pay for it to get above this 369 for me to win? So 30 cents, meaning $30 at $4, that's actually a pretty good deal. Theoretically, I'm looking at the historic graph here. Where has it been? Right, 3 years ago it hit $7. It's at 46, 618. I'm looking at the news to see maybe they have to declare bankruptcy or a contract didn't go through. Like detailing all of that, but like, is there?
Nate brings up a great point. So like, if you go, what's the earlier part that it's getting closer to? If you go right a little bit more.
Oh, sorry.
That little hump. But like, say you think the stock's gonna get to that closer to $5-6 range. Okay, like I think it can move a little bit more. Now let me look at the options to see if there's a good deal out there. And I think what's an important note is like, don't put money in something unless you have good conviction in it.
Mm-hmm.
And you're able to, like Nate said, you're able to pick something farther down the line because that helps you, when you put something like buy an option for next week, like you're increasing your risk unless you're really in tune what's going to happen in the short term.
Right.
And so buying farther out, like you're able to assess your risk a little bit more.
Mm-hmm.
Is what I would say.
Exactly.
Kind of find that in between, like, oh, travel we think is going to go up over the next 6 months. Let's buy something about 6 months out.
Exactly. Exactly.
And if it moves up more than we think in the shorter term, you don't have to wait all 6 months to exercise that. You can
cash out. Yep.
Else.
You can either buy the option or you can actually sell your option. So you have the right to sell your option to somebody else as well throughout the process. So, say it's, we want to exit or we want to buy for $1, the right to purchase 100 shares at $7.50, right? So what we need to ensure is if we're going to buy this, go to the graph, $7.50, or $7.55 is our break-even point. We want to make sure that we get above that range. But if you see the trajectory climbing up and this change price increasing as well, if that increases as well, you can actually sell your option to somebody else, or you can purchase at $7.50 and then sell the 100 shares if you want to. The other, I'm not going to get into it, but you can also sell a call option with these or a put if you have 100 shares. So that'll be another day. But like, honestly, like AmBev, I don't know where they're going. I haven't looked them up a whole lot, but I'm looking at, honestly, I actually might buy this call option come Monday when the market opens for $10, right? Like literally 10 cents a share, 100 shares. For $10, you have the right to buy this at $5 by the beginning of next year. We're 6 months out. But if for whatever reason it starts climbing and people start buying into it by July, August, because summer's hitting and people are traveling and there's a demand for AmBev, there's an opportunity for you potentially to sell it. But what I'm willing to pay here, I'm willing to pay $10 instead of 100 times 300. I'm willing to pay 10, put that on the side, kind of wait it out on the sidelines, and if I lose $10, I lose $10. But there's also an opportunity for me to make money on that as well. They have it on the phone. I don't see it here, but they actually have a percentage likelihood of you making money on these options too on Robinhood. They do a whole calculation.
Yeah,
of
yeah,
it.
Jake, to answer your question about volume, it's just, I think if you're thinking about buying call options, I think what Nate said is start with the really low price stocks.
Yeah,
And that's mostly just because, and just buy like one call option on a really low price stock,
yep,
because that's going to decrease the chances of you losing a lot of money in case the stock doesn't go the direction you think. Um, I think that's the first thing to think about. And when it comes to volume, I think to start out, stick with stocks that we know are a little bit more popular. They could still have a really low price and still be a bigger company. And so bigger companies typically are going to have a lot more trading volume. So if you want to eventually sell your call option because it's already gone up a lot, then you don't have to worry about trying to find a buyer for that because there's already a lot of volume in that stock.
right.
So I'd say
So
stick
yeah,
with bigger companies that have lower price per share, um, and then just start out with buying one call option,
yeah,
and just kind of play around with it, get a feel for some people like buying calls and puts way more than they like buying shares of companies, and
I will
so
tell you my
that's
portfolio is
something to
50-50.
experiment with.
My portfolio is 50-50. Half of mine are call options at this point. And that's because after the pandemic and COVID, I took my gains and then realized there's other opportunities that I could kind of diversify my portfolio with call options. And that's what I've been doing for the last, I say 4 months, 5 months. I've always done call options, but more so now than ever because there's uncertainty on where the market's going to go. And we've talked about the cyclical and the industrial changes over time. But to your point, Jake, the other thing to note, I think this is also very important, is yes, there's a volume ticker here, but the bid and ask, this is called the bid ask spread. So you see 5 cents and you see 15 cents. So there's a 10-cent difference. Essentially, this is the liquidity factor of how likely is it that you're going to be able to sell at the price that you'd like. So people are saying there's 2,311 bids at 5 cents. Multiply that by 100, right? And so there's that many shares that are being requested from a buyer to say, I'm willing to buy this call at 5 cents. And you have over 100 shares multiplied by 100 call options, if you will, 100 call options times 100 shares at 15 cents saying, we're willing to sell these at 15 cents. So it's interesting because Robinhood actually splits it and takes the median or the average here and says 10 cents is the number that you should put out there. I typically buy at the ask because otherwise you might not get it at the price that you want it at. That's on my own volition. That's what I determined myself to do, is I'm willing to pay the ask, assuming, because my risk reward is I'm doing my homework, I'm doing my research, and I'm going, I think it's going to be worth more than the $15 that I'm going to pay for it. I don't care about the $5. I don't care about the $10. I'm willing to pay $15 to do it. The app doesn't. Are you sure? I'm going to pull it up right now. Are you looking at Ambev? We're going to do this right now. We're going to do it live. But yeah, stock options are a great strategy. I don't do this with dividend stocks though, because you don't get the dividend if you're buying a stock option. You have to actually own the stock, the security itself. You can't be in a contract. Ford. Okay, let me look at Ford on my phone. I'll pull it up here as well. I actually have quite a few call options on Ford, just to let you know. So this one in particular, it's at 1526. It closed on the day on Friday. Why is my phone not pulling it up? That's weird. What? Talk me through it, Jake. So for Ford, I actually bought right before they announced. So I was looking at all the news right before they announced their electric truck. And I was looking at, okay, where are they going? What's happening? On top of obviously this historical graph, right? They're peaking like they've never peaked before in the last 5 years. They're at $15. Looks like the highest they got was about 13 and some change. What's the likelihood that they're going to break above $16? I don't know. But with the opportunity, I'd be looking at probably October, December is what I'd be looking at, or beyond. But as the further out we go, right, I work backwards. I look at what's 2023 going to cost me. My phone app isn't bringing, it's like stuck. I don't know what's going on. I'm trying to pull it up right now on my phone. and I don't want to go. But January 2023, am I willing to pay $358 for $15 stock, or $283 at 17? $287 is what they have here with 2 shares open to purchase. Let's see. I changed my password. And now it doesn't want to let me in. That's fine. I think I got it. There we go. Okay, I think I'm good. Ford's a good one though, Jake. This is one that I would actually be looking at buying. So don't meander off, please. I want to go through this with you. So Ford, I'm gonna pull it up on my phone. So I'm looking at the news they have here. Honda and Ford joined to push to set
So
global rules. Okay, cool. So I'm working backwards. 2023, right? I'm looking at say $15. Like the range I'm looking at is between 15 and 20 right now. Do I think it'll make more than $5 within the next few years? This is where I'm looking. 205, 283, 358. These are the magic numbers I'm peaking at. Am I willing to pay $205, 283, or 358? Where do I feel comfortable? Like I said, I don't like paying more than 158. So I'm going to go, or 150 rather. I'm going to go March, the next one down. This is where I feel comfortable. This is where I'm feeling comfortable. 106, 176, 250. I'm looking at 2017 now. Do I think by March 2022 it's going to hit one of these? I do. And so then the next thing is I'll go a little deeper. January maybe. Let's see where they're at. Compare January. So we're at 117, 145 at 1817. And so 1817, and now you see 2017, right? That's what I'm talking about. You're seeing there's the minutia has disappeared. It's becoming more vague. 2017. So I'm looking at 20. I'm looking at 17. Do I think March 2022 it'll go above 20 plus 106? So 2106 is the magic number based on this 1526. Historical charts tell me 1597 is the highest it's been in the last 5 years. Do I think it'll rally? Do I think they're going to come out with some tech that's going to blow Tesla out of the, like, you have to consider all those factors. Are they going to get, sued because their battery technology doesn't, like, consider all of those things on top of all the technical analysis that we do, right? Dylan does a phenomenal job running through charts and all this other stuff to figure out, is this a good buy? How's the institutional buying power behind this? Do we have the Warren Buffetts behind it like some other cars? And then you're making a determination. Do I feel comfortable at $106? Like I said, I'm not going to get into this stuff here today, but open interest is really high. You're looking at the bid and ask. The spread here is not too high, which is good. Means if you need to offload it, you can relatively quickly. And you're looking at highs and lows, right? Hit $1.08, hit $1. It's well within that range. 106 is not a bad number. Could it be lower? Maybe. But are you willing to pay a premium to buy it now, as opposed to potentially going above $1.06 per share? So that's what I'm looking at. This would be a buy for me. Probably, I'm looking at this. I'm not telling you to buy it. I'm saying for me, I'm looking at this at $1.06. Once again, break out the graph here. It's got a, let's see, 2106 is what it's saying. At $20, $1.06. Yep, that's right. So it's got to be at 2106 by March 2022 or before. Remember, you can execute or sell prior if that's what you prefer to do. I've done that many, many times because I don't think it'll ever hit that point again. Say, for example, some news comes out, something happens, maybe a meme stock decides to blow Ford up. They hit $20, beyond 21. Maybe they hit, 26, and you're like, I'm cashing out. That's as high as I think it'll go by March 2022 at this rate. Because maybe it happens at the end of the year, December. Something happens and you're like, I got 3 months. Maybe it's at $17. What do you do? Right? But remember, you're also only paying $106. That's your maximum loss. Right? As opposed to buying 100 shares at $15, $1,500. You have the right to buy them at $20 or sell the option and execute or not. So that's how predominantly these cover options work. Is this something that you're willing to risk, right? Potentially lose $100, but what if you end up buying even $100 worth of Ford Motor shares and it drops to $5 because some lawsuit happened, or their truck didn't sell as good and their earnings came out poor, right? So you have to bear all of that in mind as you're moving forward. So Robinhood I actually like the intuition of Robinhood. It has everything here.
I make it simple.
Very simple, too simple, right? Hence why they're getting sued. But for gamification. But this is something I constantly look at. And I'm looking for, I'll call them Bambis, right? The wounded stocks, value stocks that we always talk about, the opportunities for growth that maybe right now, specifically around earnings time, where we post, about earnings and stuff coming out on our social media, we want to make sure that we're paying attention to that, because if for whatever reason EPS is down or revenue's down, but Dylan and I talk about this quite a bit, it's like, it was down, but is that accurate? Like, based on the technologies maybe they have, maybe it's proprietary stuff that they own, like, what's the long-term play of this? Hence why we talk about all these companies that may or may not be pertinent right now in people's portfolios, but it's definitely on our radar because we know there's opportunity there. We've talked about many stocks that it's made me a lot of money. I'm not gonna lie, either by call options or just straight up owning the stocks, outside of the dividends and all the other stuff that we talk about sporadically. So that's kind of it in a nutshell. I don't want to dominate this stream by that, but more than happy to talk about it. Jake, I hope that helped you. I know you had a lot of questions about that. Randy, hope you're able to, and King, make some opportunities out of these options as we're going forward. So like I said, half of my portfolio is covered options at this point. In fact, I have a couple expiring next week. I'm gonna have to make a determination on one's losing money, one's up a little bit. So just get perspective. I'm going to write it out till the end on the losing one, just to kind of see. Sometimes you get lucky and it spikes throughout the day. We talked about stop losses last week and the week prior. Be sure to have those. If, $106 you put in, maybe you only want to lose 50, put a stop loss in so you only lose $50, not 106. Things to think about, But I digress. Dill?
No, thanks for covering that, man. And to give context, these are the kind of things that we're going to be going over on our subscriber Sunday streams, just really digging in more into the details of things. Because I know we cover a lot of content, especially mentioned before, like big content about like inflation and deflation and interest rates and all these things that can be extremely complicated, and we only have so much time to cover them when we're playing video games. And so that's why we wanted to start Subscriber Sundays, just for everyone who subscribe. Like, we're going to dive into the details of things just like we did with options right here. So that's just another reason to subscribe. If you're a Prime member, you can do it for free. So but yeah, thanks for covering that, Nate.
Yeah.
I think that's helpful for you guys to get started. And we're not the there's probably other videos online that you can watch. Go to YouTube, type in like how to buy call option 5, find like a few 5-minute videos, and keep just ingesting more information about the best strategies and the best techniques and the basics of doing it. Just our recommendation is to get as much information you can before you start making actual buys. And I think after this, 30 minutes of Nate talking, as well as a couple other YouTube videos, I think you guys will have a good grasp of buying call options for the first time or continuing to buy call options. So
yeah.
No, thanks for covering all that, Nate.
Yeah.
I think that's helpful for everybody since we've been talking about call options for the last few weeks.
Yeah. All right.
On a sad note, my PUBG is like for some reason not updating all the way.
Okay. That's fine.
Or wait. I think I just figured out. Okay, maybe. It says I still have like 10 minutes to update for some reason. Don't ask me why.
The joys of
It's taking forever, dude. The whole time you were talking, it's at 99% downloaded.
Welcome to Steam, dude.
What the fuck?
Yeah, be sure to jump in to our Discord. I see a few more people hopped in to our stream, please feel free to check out our Discord. You know, that's where we post stuff throughout the week. We don't have enough time to to stream and talk about this stuff throughout the week. We have day jobs, but definitely, I think anything you see valuable, please let us know what you want to hear more about, and if you have questions, even more so, let us know. That's very important for us. So.
You want to hop in Fall Guys or CS:GO? What do you guys think in the chat? Do you guys have a preference between those games? What would you like us to play?
Yeah.
You guys don't decide, we'll just choose one, but we'll give you guys the option since y'all are watching. Whatever you guys like better. Because my CS:GO is taking 300 years
Your
to
PUBG?
download. Or my PUBG. PUBG is taking 300 years to download. It's like you buy these fancy ass computers and then they function almost as well as my computer I had for the last 10 years. So I don't know what's going on.
You also live in a very hot climate. What's the weather over there right now, buddy?
Yeah, so I don't know. I have the AC on.
Got it.
I started turning my AC on so that my computer doesn't overheat anymore while I stream.
Where are you from,
It's
King?
been working so far.
King, where are you from, by the way?